ahead. Back to you.
Okay, thank you very much for that. Prakash Diwan is joining us on the show now. Prakash, we've asked you about PSU banks before as well, and especially the ones outside of State Bank of India. But any thoughts on these, on the report by Bank of America Merrill Lynch and how the ROAs and the return ratios are set to improve from here on? Would you concur?
Good afternoon, Rima. Yeah, absolutely. I think the big change in the key matrices does involve the ROA shift, and that's something which is fairly secular. You know, when it happened the first time in a bank like Canara Bank, probably thought this was one-off. But the way it's kind of getting to be replicated across some of the smaller banks as well, very clearly seems to indicate that this is a deep-seated trend that would probably start being very favorably visible going forward. And you know, interestingly, what's happening is look at how PSU Bank is now positioned. They know that they are challenging themselves with market share or credit growth, which is keep pace with the private sector peers. But they've started leveraging on their branch network, on the relationship, strength that they have, the sheer numbers that are in favor. And I've started getting calls from PSU banks where I used to have accounts, which I never anticipated would happen. So the kind of data mining and all that's happening. So eventually, when the MSME segment starts growing in terms of borrowings and the credit growth comes, the shifts towards that, I think it's going to be a huge change that they can make to their size and the growth scalability. So very clearly, ROAs are here to stay, and we will have to kind of, all of us will have to rework our book value estimates and growth estimates basis that, which means there's still much more legs to this rally that we've seen.
Hi Prakash, good afternoon. I wanted to ask you about HUL. That stock was an underperformer actually. Then it went all the way, I think, to around 2,650 odd before cooling off. Currently, it's making a bit of an up move. What's your view on that one?
So Nigel, interesting that you asked about this because this is going to be a trend. It was triggered by the numbers that came through from Britannia, and HUL will probably show this in the December end numbers. And what's the big change? The last 2 quarters, Q1, Q2 for them, most of these players this year has been more about cost efficiencies, control, rationalization of spends, and all of that, which they actually did to just kind of keep themselves in the reckoning in terms of being able to justify the high valuations that they always trade at. Now these benefits that they have incorporated in their functioning is actually here to stay, and it will kind of start leading to improvement in margins, which is far more substantial than what we think. For the simple reason that raw material prices have started easing off. You have the ability to probably at some point take a price hike somewhere maybe next year, and the distribution costs or the stocking up of material, of inventory that they've actually had to grapple with is making things much more efficient. So from all these counts, these vectors help you get back to those margins which you need to kind of justify premium valuations, and premium valuations will come back because at heightened levels of the index, you will need a little bit of move to safety, to the flight of capital to the safe havens like pharma and FMCG is well known. I think FMCG do offer that space, even if consumption demand is weak, but the supply side dynamics are much more favorable in margin restoration. So that's what's working for HUL. It probably happened to the likes of ITC and Dabur and a lot of the other players as well.
But I agree with you. In FMCG, I won't name a company, Rima. I was told that again, unfair because people will be left wondering which one is this, but I can't. But a large company, they for the first time in 15 years did not give out like a one-time bonus which they give out to all employees.
Okay.
So yeah, I mean there is pressure. There is on the demand side, supply side is also easing. So I guess that balances some out, but there is clear pressure which is coming through in the staples companies. I mean, the ones that Prakash was talking about. Any thoughts, Prakash, on some pullback that we are seeing, pullbacks rather we are seeing in all these defense names? Will they have to go down a lot more for them to become attractive, or you think one can start looking at them?
So, Prashant, interestingly, what's happening is defense as a theme or as a sector is kind of getting much more broadly accepted. I mean, the narrative is right now chasing the price rather than the other way around. And when the smart investors started buying into these stocks way back, let's say 6 months or 12 months earlier, the valuations were very comfortable. Now, the beauty about some of these stocks is that you will want to be in that. They are the DMarts of the world. So an HL, for example, or a Mazagon Dock, you cannot stay out of it if you want to have exposure to the defense names, because that's where the growth is very clearly being visible. The kind of guidance that is being revised upwards, the visibility that's coming for the likes of HL and all is fantastic. So I think what's happening is finally the price is justifying the narrative that's building around, and there's a huge participation on the retail side that's coming in. So I think they're going to get into that stage where they will be overvalued by the sheer demand impulse which is there for this paper. People are forgetting the fact that there are a lot of these private sector names, while you have this whole bunch of very promising PSU-led defense play. The private sector names which are also making a lot of headway into defense. So case in point is Bharat Forge. Very clearly, I think it's like a company that's completely reset itself from an automobile ancillary major globally to a railway come defense play. And the defense play is only going to keep on getting much more sharper as the years go along. So I think that's where people need to look at and not just get carried away by momentum in some of the defense PSUs. I'm not saying they don't have promise, but I said they'll be good at a price, and probably that price is still some time away.
Stay on, Prakash. By the way, Brent crude has slipped further. We're now at $89.5 per barrel for Brent crude. In the morning, we were above 90. So despite the weakness in Brent crude, which is positive for India's economy as well as markets, the markets have taken a turn for the worse. It's clearly a down day, down close to about 0.5%. Get into a break. We'll come back and talk all things market. Anand Shah of ICICI Prudential AMC will also be joining in.